Another trading day, another time for real-time daily trading ideas. Our daily webinar. We have 5 days a week, 5 different traders. Today it's Tuesday, 13th of February 2018. So in a couple of minutes, our day trader of today will be Paul. My name is Jens. I'm sending from Berlin office from Admiral Markets. I will make the introduction. Welcome. 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 of your questions directly answered in our webinar. Our goal is quick and smart, 15 to 20 minutes, but for that daily. So let's have a smooth start, and we start like always with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you are a starter, please start with a demo account and make yourself familiar with the leverage trading, long trading, short trading, and your personal risk management. If you like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the full risk disclaimer on our web page. This is me. My name is Jens. My English is made in Germany, but hopefully some of my quality too. But like I said in the introduction already, I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday it's Jay's day, on Tuesday it's Paul's day, on Wednesday it's Mike's day, on Thursday it's Nenad's day, and on Friday it's Dirk's day. Our leading day traders live. Today's actions are tomorrow results. Yeah, and of course, if you like to trade Forex and CFDs, you will get many benefits only at Admiral Markets. For example, choosable leverage. For example, safeguards like our negative balance protection policy. For example, best spreads like our bestseller DAX 30, typically fixed spread of 0.8 points only without any additional commission. Check all the benefits out. Where? Of course, at admiralmarkets.com. There you will find also something about our regulatory background and also our contact details. Call us, send us an email, or visit our other channels like YouTube or Facebook. Everything is linked from admiralmarkets.com. Enough from my side. Now time for Paul. Hi, good morning, Paul. Your view to the markets. Let's have a nice start.
Good morning, Jens. Good morning, everybody. Hello, traders. I hope you can all hear me. I hope the session's being recorded for you to be able to watch. Well, ladies and gentlemen, here in the UK, we have a saying that a week is a long time in politics. And it also could be said that that applies to financial markets as well. If you remember, last week we were sort of Tuesday morning. We just had the sort of biggest drop in the Dow in terms of points in history, and the markets looked somewhat, let's say, somewhat fragile, shall we say, somewhat fragile. And we had a good conversation about what was a plan that we could trade, how could we work that, and how would that play out throughout the week. So what I'm going to talk about today is I'm going to go through a little bit of that from last week and see how did we come on, and then we'll talk a little bit about the kind of, we'll finish off with the let's say the normal staples in terms of having a quick look at some of the euro pairs and the dollar. So if you remember, here we are. We're looking at the Admiral MetaTrade 4 Supreme Edition here. Okay, I've just got a market overview profile open. Hopefully you can see I've got the Dow, the S&P, the sort of the Nasdaq, the DAX, the FTSE, the yen. Okay, also have a little bit on dollar, the gold, oil, etc. So it just gives me a broad overview of the markets. Now, if you remember, last week what I talked about was, let's see if I can bring this up. Hopefully you can all see that. Let me just, here we go. What we talked about, I'm just going to get rid of some of this stuff so we can see. What we talked about was, price had really fallen down. If we talk about last Tuesday morning, we were down about here when I spoke to you. Okay, it was down about here, and everybody was looking a little bit dicey, wasn't it? And so I said, let's have a simple plan. We'll form a simple plan. We'll trade with that. I put on a big trade and a small trade. So what I looked at was effectively, I wanted to see, was this going to be a case of, were we going to get a retracement back into this kind of 50 to 62 sort of percent retracement zone, and then a move downwards. And that's what we talked about. And if I just zoom out a little bit, and I was just looking at, maybe the sort of price action doing that, okay, and maybe then extending down to the 127 extension. So we talked about a big trade namely being, my kind of entry really being at that kind of 50% level, with my stop was, I wanted it to be just above the 20 period moving average, okay, where we had, and then my target would initially be down there at the 127, and that trade triggered, and it's still running, it's still in profit, but it hasn't exactly played out how we sort of talked about, and so I'm going to be watching that to see what happened. But what did happen is, if I remember, I talked about a big trade and then the small trade, like an intraday trading idea. So I'm going to quickly show you what happened. Price did indeed bounce back to that zone, but it came back very, very swiftly. It came back on the sort of within a day or two. On the Wednesday, it came back into that area. And when if you remember what my view was, what my sort of plan was for you all was to say, wait and watch, okay, to see price if it does get back up into that area. Then start to look for a bearish engulfing pattern or a bearish key reversal pattern or a bearish 1, 2, 3 pattern that would give you an opportunity to sort of take the trade, right, on a sort of, let's say, a smaller time frame. And I had to wait, okay? I had to wait. I had to demonstrate an element of patience. And in fact, actually what happened is, I ended up watching all the way down to sort of the 5-minute chart on the Wednesday. Price, you can see, had got into my zone. Price had got into my zone, and then here we had okay, a nice big bearish key reversal. Okay, it was we pushed to new highs, but we closed right on the lows, lower than the previous close. Okay, within a zone where I wanted to get my trade on. So of course I thought, well, fantastic, here we go. All right, here we go. This is my trade. But here's where Paul made an error. Yeah, and I'll show you where Paul made an error. Paul got, in the UK, Paul got he was a bit of a smart aleck. That's the kind of the polite way to describe it. And actually, I had my order in here. I had my order in because I thought price would maybe move up a little bit, soak up some of the rest of the orders, and then fall away. And so I had an order there about here on the Admiral about 25,255, okay, with a stop above and a target well down. And unfortunately, it didn't actually touch it. It didn't come up, it didn't touch it, and then it fell. It fell very, very nicely. Now, those of you who are experienced traders would know and see that there was actually other areas to sort of get into that trade. But, I had an order there, I had a trade. I tried to be too smart for my own good, and I paid the price of missing out on a 600-point drop. So the question for all of you is, on a scale of 1 to 10, with 1 being calm and 10 being furious, how grumpy was Paul when that trade didn't trigger? Well, I can tell you Paul was quite grumpy. But all is not lost, ladies and gentlemen. All is not lost, because whilst that trade setup didn't work on the Dow, it did work very, very nicely for me on the Nasdaq. All right, and let's have a quick look at that. Let's just move this down here. Let's have a look. Got the Nasdaq here. It's the same plan. Remember, last week you can watch. I think the session is on YouTube. I said basically we're going to sort of look at the daily chart, draw in those zones for that kind of 50 to 62% retrace. Wait for price to get up there. If price puts in a bearish pattern, right? Well, then there's an opportunity to take a short sort of intraday swing trade opportunity, okay, that will allow you to sort of join on board this kind of these large volatile moves. So here's the daily chart of the Nasdaq. We can see it pretty much did the same. It came down and it came back up into that zone. And here's the interesting on the Nasdaq. Well, there we go. First point was, we had a sort of a bearish pin bar there on the 4-hour candle. I know some of you are you like to trade pin bars. Some of you like to trade longer term position trades, okay, or swing trades. There was the opportunity there on the 4-hour pin bar. Then if we go down to the hourly chart, price rallied up, okay, and put in I would probably call that more of a bit of a sort of a doji than a really clear pin bar because of where the body is. But the next candle was very bearish, took us out of that zone, and that becomes an evening star formation, ladies and gentlemen. So if you're an hourly chart trader, there was an evening star formation in a zone where we wanted to short, okay, and there was a nice opportunity there to take the trade. Same again on the 30-minute chart, okay? The 30-minute chart, price rallied up, it hit and created a bearish pin bar, okay? Even though the candle may have closed as bullish, it actually was a bearish pin bar off that sort of 200 period moving average on the 30-minute chart, okay? So there was an opportunity there, all right? So there was quite a lot of opportunities, and once again, I was active trading and looking at the 5-minute chart. And here's the thing, the same sort of pattern showed up in the Nasdaq as it did in SP, as it did in the Dow. All right, we had price rallied up, price put in a nice new high, and then closed right down on its lows, closed right beneath the low of the previous bar. That's giving me an indication that the bears have stepped in. All right, the bulls are no longer in control. The bears have stepped in, and I want a piece of that trade, okay? So being able to do that, I had my order once again. I was trying to be a bit of a smart aleck, okay, and sort of have the order a little bit within that candle. So I had an order to sell at what was 67.07, all right? The stop was at 67.20, and that trade hit. That trade basically hit my entry point, and then it ran very, very nicely for me, okay? So it ran very nicely, made a very, very handsome reward for me. So, you know, there we go. Yes, I was grumpy that it didn't do it on the Dow, but on the Nasdaq, the trade played out beautifully, okay? And you know, I talk about patience, and I appreciate patience is a bit of a muscle, all right? You have to practice it, you have to build it, okay? It's not something you can naturally switch on and off just like that. But it becomes a lot easier to be patient when you have a nice, simple, clear plan. And that was the simple, clear plan we had last week. Identify those kind of zones, all right, on all of the indexes. Wait for price to get into those zones. Once it's in that zone, look on a shorter time frame for a bearish, okay, a bearish price action pattern. And that was an opportunity to take a trade in the direction of where let's say where the sentiment was taking us at that time. So there you go. That trade played out, you know, very nicely. Okay, that was a nice work, and it kind of, as I said, it made up for my grumpiness on the Dow trade. But there you go. We're traders. Nothing is perfect. You know, we have to trade what we see, and we take the opportunities when they present themselves to us. So that was last week. We've had a push down, and the last couple of days have been very, very good for those indices. Okay, Trump came out and said a few things yesterday as well about his infrastructure plan. I'll be interested to see how that plays out for the rest of this week. So whilst that's going on, let's have a look at the you know, some of the normal staples that we talk about here, because it's actually been a little bit quiet there on the on some of the FX pairs, okay? But there's always something to keep us going. There's always something to look at. So let's have a little quick start here. Dollar index. I'm just going to actually go up to the monthly chart. All right, we talked about this here. Here we are, monthly chart. Okay. You know, as I say, as always, for those completely new to trading, okay, just very simple charts. Green bullish candle, red bearish candle, all right, blue 20-period simple moving average, a red 50 simple, and then a green 200 simple moving average. And you can see we're drawing in sort of horizontal lines of support and resistance. Some of the little fractals as well help me there. You know, we talked about, you know, over the last few weeks of it breaking the level and falling down. You know, what I was interested in is that, you know, we kind of ran into this, so let's call it around about, you know, 88.75 level here on the monthly, which, you know, here we go. You know, we touched that, all right, back in 2010 and 2009, 2008. Okay, so, you know, there has been reactions to this in the past, so it's a level to keep an eye on. Okay, and as we go down to the weekly chart, we talked about how it had broken down. If I go down to the daily chart, this is kind of interesting. The daily chart, you know, I would look at that as a little bit of a double bottom there, okay, that we happened there, okay. We had a low here with a little bit of a higher low, and then price rallied for the last week. Now, you know, remember what I was saying, you know, last week, okay, is that, you know, we saw you know, a move into the dollar. The dollar rallied, okay, when there was volatility, all right. So if I was you, ladies and gentlemen, I would take that little nugget of knowledge and stick that in the back of your brain, put that into your little trading journal, all right? Because invariably, you know, were this to carry on, or were this to, let's say, that kind of, you know, real bearish volatility sentiment, you know, re-emerge at some point in the next few weeks or the next few months or even this year, that might be useful information that can help us when, you know, a bigger push may happen. But what we had was we rallied up, okay, we got around about, you know, back up around about these lows, okay, the 90, and now what we're doing is, you know, we're sort of pushing down, okay, well, you know, we're pushing down here. And what I'm intrigued to see is, here is the daily 20-period moving average on the dollar. Is this now going to act as dynamic support? Okay, if this acts as dynamic support, you know, then we may get a leg up. And then this starts to look like a double bottom, which is also a bit of a scruffy inverse head and shoulders, all right, a bit of a scruffy. So I watch that, and I start to use that in some of my other trade ideas. I start to look at, well, you know, what's going on there, because remember, the dollar index, it's made up by about 57% of the euro dollar. So why don't we have a look at the euro dollar for an idea? Hopefully you can see that, you know, effectively, you know, it's almost like, you know, it's almost, you know, picture perfect reversal of the dollar index there. About a double top, price has fallen through, and now price has rallied back up to this kind of this zone here, this level, and this is what I've been looking at for today for a little trade to test the market. If I go down to sort of, looking at go through the charts, we're back up to that level. We had a little bit of there's a pin bar there, okay? Let's a little bit of an interesting pin bar. That kind of starts to get me interested, okay? But, I'd already looked on the sort of the hourly and the 1 hour. What I was looking at here, the 1 hour chart, look at the sort of, look at the price action there. At that moment, that's forming some, could form a very nice clear fractal. There's lots of wicks to the top there. And that's what I was looking just a little bit before we came on. I had an order in here, okay, euro dollar, just to test this market. Let's see, let's see if we are going to see a little bit of, let's see how this plays out. Okay, for the intraday. So, I had a short there about 23.24, stop at 23.40, and my target, down here is kind of 22.77. All right, that gives you about 2.8 reward to risk. It's the I placed it on here using the this fantastic mini terminal. Okay, I normally like to try and place it in the session, but the market wasn't waiting for me. Unfortunately, the market wasn't waiting for my 10 o'clock kickoff. It had already made its mind up there, okay, that it was off and running, probably off the part of some of the UK data. And so, I just literally placed it up there, okay, order on there, all right, for the stop above, okay, my trade down there. If you're a longer term trader, okay, let's say a swing trader, well then then actually you can look at sort of looking at that pin bar, we'd have a look at just having a trade beneath the low of it, all right, just getting close for the stop above, and then not surprising, the daily or the 4 hour 200 puts in a very, very nice target there for us, a very nice valid target, okay. And what I'm interested in here is this euro dollar. If you look at that on the 4 hour chart, we've got the 50 sloping down, the 200 sloping up. It's almost like a triangle is being formed, okay. There's compression happening, and we'll have to sort of wait and see what comes out of there. So there's a little idea for you there to take away. A couple other quick little updates on one or two other trades that we've had going for a while. Here is the euro against the Swiss franc. Now, remember, I've talked about, I'm always wanting to be buying strength, selling weakness, and for the most part of the last almost 10 months, euro has been number one. All right, euro remains number one, but it's slipping away. Okay, it's slipping away. There are, when you're at the top, okay, there's only one place for you to go. For most of the last 10 months, the Swiss franc has been decidedly dull, okay. It's been down at let's call it like the lower half of the strength matrix within the major currencies. And we talked about it a few weeks back, I think maybe even the sort of start of the year, about how on the daily, the euro Swiss was almost like a rising wedge here, and it could only really go one way. It could either go parabolic out of the top, or as we decided and sort of placed trade around, it could break out, okay, break out of the south side of it and start to head down. And that gives me some indication, okay. If you've noticed, or if you watch the sort of the strength matrix on currencies, the Swiss franc has climbed the ladder over the last 2 weeks, and it's presently sort of in my strength matrix. It's pretty much neck and neck with the euro at the moment, okay. They're kind of knocking 1 and 2. Sterling has been knocked down to number 4. Euro and Swiss are 1 and 2. So, when I'm looking at them, being neck and neck, well, when I look at the Euro-Swiss chart, that gives me an indication, well, where is the sentiment? Who's more likely to be stronger? And what we can see is Euro falling, Swiss, which means the Swiss is strengthening. So, the Swiss has been strengthening, okay. It's been strengthening nicely the last couple of weeks. It's been very quiet, okay. Not unsurprisingly, maybe with some of the volatility, there's been a little bit of a pouring into it, but there's an opportunity there. With regards to our trade, what we had was originally we had a nice target down here, okay, but you have to adapt to the market conditions as shown. We now have this daily 200 here, okay, and the daily 200 is it's a strong self-fulfilling prophecy, all right? It's a strong self-fulfilling prophecy, and what I'd be looking to do is, I'd be watching to see how if the trade makes it down to that zone, that area where it's at, around about that 113.80. I would be taking a look at what's the price action there, okay? Because if the price action is a reversal, is a strong reversal, then I would probably look to step aside from this particular trade that we have, okay? So there we have. And just briefly to finish last minute is, I know last week some people asked me to look at euro sterling. We didn't have time, so much going on. There's a lot going on in the markets. I'm trying to give you as much as I can and cover what we can. Here's euro sterling daily. You've heard me talk about it so many times, this 87.50 level, all right, acting as support. Okay, every time it's got down there, you know, it's kind of teased us, but actually it's come back into that zone. All right, it's come back into that zone, and that's where we find ourselves today. If I was to make any kind of very, you know, sort of quick assumption, or, you know, quick view, is that what I'm intrigued in is to see that, you know, when I look at the highs here, the majority of them have been lower highs. It's almost like, you know, we're into a wedge or into a sort of descending triangle. So that's what I'd be keeping an eye on there, okay? Just keeping it. There's nothing for me to do at this moment, but because it's in the middle of that range, but I would be just watching to see, you know, is it, you know, we looked at euro dollar compressing there. Is the same happening on the euro sterling? Are we getting a bit of a compression towards maybe a bigger move? And you know, we will of course we will cover that in our Tuesday sessions. So there you go, ladies and gentlemen. As always, I'll try to cram in as much as I can. I hope you found that useful. I wish you the best of success with your own trading. And you know, I'm not sure if we have time for any questions, Jens. If we have, I'll happily take them. If not, well then, you know, I'm sure you'll join our speaker tomorrow, and he'll be able to help you with your trade analysis. So good trading, ladies and gentlemen.
Time is our limit, like always, but for that we have this webinar daily. So tomorrow is another day. Tomorrow our day trader is called Mike. Hope to see you tomorrow again. And if you like to see and watch this again, a couple of hours later, you can see it as a recorded webinar in our YouTube channel. So many channels: YouTube, Facebook, admiralmarkets.com, and of course MetaTrader 4, MetaTrader 5 for your trading. All the time, good trades, and hopefully see you tomorrow. Bye bye.